Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 11th of November. Will Trump make the US dollar great again? Ever since the election outcome, market participants have continued to speculate over what policies Donald Trump is likely to implement. The pattern suggests that investors expect much higher inflation in the future than previously anticipated. US 5-year inflation expectations have surged in the last few days alongside US Treasury yields and stock market indices. In short, investors are fleeing the safety of bonds on bets of higher inflation hurting their portfolios, and as such, they increase their exposure to equities. Why do investors seem to link Trumpenomics to higher inflation? In our view, expectations of higher inflation may be the result of two key themes of his campaign: increased fiscal spending and trade protectionism via higher tariffs. With regards to fiscal policy, investors may be looking at the possibility of increased spending on things like infrastructure and expect this to drive up the cost of production in the economy, as well as stimulate demand through putting more people to work. That scenario would imply higher prices in the economy overall. Now, as far as trade deals are concerned, protectionism via tariffs also implies higher prices, as the government artificially raises the cost of imported products and thereby increases imported inflation. To link everything up, accelerating prices due to these government measures could cause the Fed to tighten policy faster in order to curb inflation. Therefore, it's possible to see a higher path for interest rates than currently projected by the FOMC's dot plot, which also explains the latest surge in the US dollar. This view is supported by recent comments from Fed's lacquer, who said overnight that greater fiscal stimulus would imply a steeper path of rate increases. What we find the most interesting out of all of this is that although market participants seem to be speculating that these inflationary effects may kick in, they appear to be betting that they will become much more visible in the long term and not so much over the next few years. This can be seen by the widening yield spread between shorter dated and longer dated US Treasuries. Therefore, even though these positive effects in USD and equities may continue for a few days as investors bet on how Trump's policies might play out, we would like to stress that for the time being, these moves are purely speculative. In this respect, we expect market attention to gradually turn back to economic data and monetary policy decisions, at least until Mr. Trump lays out concrete plans on how much he plans to spend or how steep the tariffs he proposed may be. As for today's highlights, during the European day, the economic calendar is very light. The most noteworthy indicator we get is Germany's final CPI for October. From the US, we get the preliminary University of Michigan Consumer Sentiment Index for November. Given the lack of critical data today, market attention may shift to economic speeches. We have two speakers on the agenda: Fed Vice Chair Stanley Fischer and Bank of Canada Governor Poloz. We believe that following the US election, investors are likely to scrutinize Fischer's comments closely for any hints on whether Trumpenomics and greater fiscal spending are indeed likely to cause the Fed to tighten policy faster. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.